SBI Life Smart Wealth Builder Policy. Will this policy help you build wealth smartly? Will this help you get adequate life cover? Let us analyze and evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision. Before evaluating or analyzing this particular policy, let us understand the key features of this policy. SBI Life Smart Wealth Builder is a unit-linked insurance plan. That means it is market-linked. The premium collected will have two portions. The first portion goes towards getting you life cover, mortality charges, and the second portion goes towards investment. That investment portion is invested in stock market and money market based on the funds you choose. So as it is invested in stock market, there can be ups and downs. There can be volatility. There is a risk component in this product. This particular policy has got three variants. One is single premium, you pay premium and wait for some time and on maturity get back the value. Or limited premium payment term, you pay premium regularly for a fixed period. After that, wait for a set of period and on maturity get back the maturity value. Third option is you pay premium till maturity period. Then on maturity, without waiting further, you get back the maturity value. All the three options are available in this policy, and this policy gives you life cover throughout the policy term. For the first 5 years, there is no policy administration fees. On 6th year onwards, policy administration fees will be charged. The first 10 years, there will be premium allocation charges. After 11th year, there will not be any policy allocation charges. Under section 80C, you can get the benefits, tax saving benefits. The investment portion of this particular policy will be invested in 11 funds of your choice. They will give you 11 funds. There are funds which will invest only in equity, 100% in equity they can invest. It is available. There are funds which will invest predominantly in fixed income schemes. That is also available. And in between, different ratio of equity and fixed income allocation is available. There are funds which focuses only on mid cap. There are funds which focuses on top 300 theme. So different things are available based on your specific requirement. You can pick and choose the fund combination. If you are an aggressive investor, you can choose 100% equity. If you are a very conservative investor, you can choose only fixed income scheme. Or as a combination, you can pick and choose also. Like some portion in equity, some portion in fixed income, also you can pick and choose. The death benefit from this policy is the highest of these three values. One is fund value, second one is basic sum assured, third one is 105% of the total premiums paid. Out of these three values, whichever is higher, that will be given to the nominee in case of unfortunate death of the policyholder. As we have looked at the key features and also the death benefit, now we will move on to the maturity benefit. This particular policy can be assessed in a worst case scenario and also in a best case scenario. SBI Life's website has generated a benefit illustration. Based on that benefit illustration, in a worst case scenario, if the fund itself generates 4% kind of return, then what will be the net return for an investor? If an investor is paying 50,000 rupees every year for 30 years and on maturity, at a 4% gross return, it accumulates to 21,74,000 approximately. It works out to an IRR of 2.26% return. In a worst case scenario, it generates you 2.26% return, which is less than your savings bank account interest rate. In a best case return, SBI Life's website's benefit illustration assumes they will be able to generate 8% kind of return. At a 8% gross return, the money will be generating approximately to 42 lakhs. 50,000 rupees paid for 30 years. On maturity, it works out to 42.95 lakhs. So it works out to the net return for an investor, it is 6% return, 6.01% return. So in a worst case scenario, it is generating you 2.26% return, which is less than your savings account. And in a best case scenario, it is giving you 6% return, which is comparable to your bank FD kind of return. Is this a good return? 6% may be a kind of decent return if you are comparing it with an FD. But remember, this product invests in stock market, takes risk. So is 6% is a risk-adjusted return? No. Why do we take risk and invest in stock market? Because we want to beat inflation. 2% or 6% is definitely not sufficient to beat inflation. And money is locked for long term, right? 30 years. Even after locking your money for 30 years, it is generating you 6%. So this is not a very good long-term return also. So money value is getting eroded. You lose your purchasing power by investing in this product. So to get much more better clarity, let us compare this product with few other investment options so that we'll get clarity. Let us compare the debt fund version with PPF and term insurance. So this policy gives you life cover and a maturity benefit. So this combination of term insurance and PPF also can get you life cover as well as maturity benefit. Let us see how it works. The 50,000 rupees premium is divided into two portions. 10,500 goes towards term insurance premium. Balance 39,500 goes towards investing in PPF. PPF is a government-backed fixed income investment. As of now, the interest rate is 7.10%. If someone is paying for 30 years, then on maturity, it works out to 40.6 lakhs. 40 lakhs is the maturity value from PPF, even after getting 1 crore cover from term insurance. The same money invested in bond fund of this particular plan works out to 23.97 lakhs. Even a very safe government-backed investment like PPF and a combination of with term insurance has got the potential to generate 40.68 lakhs, which is close to 17 lakhs higher. So do we have to invest in this policy? Before you take your decision, let us see one more comparison. Let us compare this plan with the combination of ELSS mutual fund and term insurance, right? ELSS mutual fund also invests in stock market, so it can go up and down. Volatility is there. In the past, ELSS funds have generated 12% kind of return. So we are taking 12% as the rate of return assumption for ELSS mutual fund. Again, here the money is divided into two portions, 50,000 rupees divided into two. 10,500 is going towards buying term insurance policy. Balance 39,500 is invested in ELSS mutual fund. After 30 years, on maturity, it works out to 1 crore. It works out to 1 crore. Whereas in equity fund option of the SBI Wealth Builder plan, it works out only to 45 lakhs. There seems to be a huge difference. Even after paying tax for ELSS mutual funds long-term capital gain, it works out to 97.7 lakhs. So there seems to be a huge difference, 45 lakhs and 97 lakhs. Close to 50 lakhs is the additional gain by investing in ELSS mutual fund. So this ELSS mutual fund return seems to be a much higher return for an investor. Definitely this helps you beat inflation. This is definitely a good risk-adjusted rate of return. Again, this is a very good wealth compounder for a long-term investor. So we have compared this product with PPF as well as ELSS. So what you should do as an investor now? As an investor who is investing for long term, 5 year plus, If you are an aggressive investor, risk tolerant investor, then go for a combination of term insurance plus ELSS mutual fund. Or if you are a very conservative investor who want to avoid risk, then in that case, go for PPF and term insurance combination instead of SBI Smart Wealth Builder plan. So, do you have to invest in this plan or avoid this plan in a nutshell? Because it is a long-term plan and investing in stock market taking a risk, but it is delivering very lesser return, 6% or 2.26% return. Definitely, this policy is not going to help you beat inflation or is not going to give you a good risk-adjusted return. So obviously, you have to avoid this policy and either go for a term insurance plus PPF combination or term insurance plus mutual fund combination. We have done an in-depth analysis about this particular policy and it is available below this video in the description box. You can read the blog post and get to know the complete research details about this wealth builder calculation. If you have any questions related to this wealth builder policy or any other insurance policy or investment option, feel free to book a free appointment with our financial planner. The registration link, booking link for the appointment with the financial planner is also given in the description of this video. By the way, will you be interested to attend insightful investment webinars? We organize regular insightful investment webinars. The registration link for the next insightful webinar is given below this video in the description box. Feel free to register for the upcoming webinar and discover the strategies to create long-term wealth. If you're not subscribed to our YouTube channel, subscribe today, now. Bye.